Can a landlord write off that $12,000 in uncollected rent? The IRS says no, and here's why you're wrong to even try and write that off. You're sitting there looking at your books. Your tenant didn't pay you because they lost their job, there was a rent moratorium, the dog ate their money. Whatever the case is, the tenant did not pay you. Instead of receiving the full $20,000 of rent you were owed this year, you only received $8,000. That $12,000 difference feels like a straight loss. So you should obviously be entitled to a deduction, right? Wrong. Trying to claim that uncollected rent as an expense makes zero sense to the IRS and to math. Let me explain why by looking at the form where you report this, the Schedule E. As a landlord, you are almost certainly using the cash basis method of accounting. That just means you only report income when you receive it, and you only deduct expenses when you pay them. Let's look at the math on two properties that you own. Property B collected the full $20,000 of rent owed. Property A only collected $8,000 of the $20,000 owed. For this example, let's assume both properties had $9,000 in total expenses for the year, things like repairs, insurance, depreciation. For property B, the profit is $20,000 minus $9,000, which nets you $11,000 in taxable income. For property A, the profit is $8,000 minus $9,000, which results in a $1,000 loss. The $12,000 of uncollected rent is already baked in. You paid significantly less tax because you reported $12,000 less of income. If you then tried to claim the $12,000 uncollected rent as an additional expense, your total loss for property A would suddenly be $13,000. You can't lose more money than you spent. Your actual expenses were $9,000. It's mathematically impossible to have a $13,000 loss. Think of it like a business. If your revenue dips from $300K to $50K, you don't get a $250K deduction for the missing revenue. You simply pay less tax on the lower income amount. Okay, so you can't deduct the rent, but you can deduct the painful costs associated with trying to collect it and ultimately getting the tenant out. These are legitimate out-of-pocket expenses that reduce your overall rental income. You can deduct things like legal fees, all fees paid to your attorney to manage the eviction case. You can deduct court costs, the filing fees and related administrative costs paid to the court. Things like unpaid utilities. If the lease makes the tenant responsible, but the landlord has to pay to keep the service running or clear the bill, then that's a deduction. Damages. The cost to repair any physical damage the tenant did to the property beyond normal wear and tear. This is classified as a deductible repair expense. Focus on documenting and deducting these costs. They are real expenses that do reduce your taxable income. But what if you take the tenant to court, win, and get a judgment for the $12,000 in back rent? Doesn't that change the tax picture? The short answer is none. A court judgment is a legal tool that says the tenant owes you the money. It doesn't mean you've received the money, and it doesn't create a tax deduction under the cash basis accounting method. Why? Because you've never reported the $12,000 as income in the first place. You can't claim a loss on income you never reported to the IRS. The judgment is an asset for future collection, but for today's tax bill, stick to deducting those out-of-pocket eviction costs. That's the correct path.
Hey, my name is Arash. I help people create plans to pay less in taxes. Did you know if you like, subscribe, and comment on my videos, you will automatically save 10% in taxes? Okay, that's actually not true. Also, I need to let you know that none of this video should be taken as tax advice. However, I would love to give you individualized tax advice. All you have to do is schedule a consultation on my website, link below.